Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs and certainly explore the products and services available. Alternatively, you can visit www.cfds.education to certainly learn more. Okay, in terms of this, short squeeze, which I explained in my previous video, if you see the earlier video today, I did explain that get ready for a potential short squeeze, and that's exactly what's ensued. Now, it was quite powerful, especially on the Nasdaq, and quite a powerful reversal. Let me just demonstrate that to you. You can see here the Nasdaq. That's one hell of a squeeze from 4133 to 4230. So a 100-point rally, which was very, very impressive. The S&P too as well. The pivot low at 1880, which I did explain on my daily. Yesterday's analysis and today's analysis as well. If you go to your weekly chart, you can clearly see you have the pivot low here at 1880. So watch out for 1880, 1890. So, and that's exactly what's occurred. Okay, so impressive rally thus far. Okay, and you can see there diagonal trend line certainly is holding, and 60-minute chart we are holding previous support equals resistance and holding that 50% fib, and we'll see how the market reacts there from there. Now, a telltale sign was from the Nikkei. As you can see here, we closed this gap and we put in a bottoming tail, and that was a potential bottom in the Asian markets. Now, not only that, you also had a rally in the Shanghai, although it is into gap fill resistance, so certainly some caution needs to be warranted. But then you do have an additional gap above. Okay, so certainly holding support in the Asian markets. Okay, so as you can see here, quite an impressive rally in the Shanghai, and it's long overdue as well. Okay, so that's the situation that we find ourselves in from the Asian markets and from the US markets. Okay, in terms of the news flow thereafter, in terms of the economic data, let's just quickly skim through that. ECB policy meeting, BOE. So basically, the summation was the fact that the BOE was dovish, the ECB was certainly dovish as well, with certain members. It was a contradiction to the story earlier on with regards to Reuters, stating that no members warranted or stated that they wanted further QE, and then obviously you had the minutes from the meeting, and that stated to the contrary, i.e. some members warranted further QE. Okay, so that obviously was bound to cause a short squeeze. Okay, so we had initial jobless claims, which actually came out weaker. Export prices, import prices, more or less in line, if not weaker. Mr. Bullard was really the main catalyst for the actual rally that triggered it, sparked it. He discussed the fact that the situation or scenario of inflation expectations and oil. So he linked oil with inflation, and obviously that was bound to be negative, and that's basically the reaction that we received on the markets, and hence the reason why we had this short squeeze. Okay, now let's look at the actual European markets and let's see where they stand and where the market is actually headed next. And that's the key question, and that's what I think we need to work out. Okay, daily chart of the Eursotoxx. Daily chart Eursotoxx, as you can see, has held that support level and certainly is in a bullish pattern now. Okay, now you can cross verify that with the S&P 350, as you can see here, holding support, and with the stock 600 as well, which again you can see bottoming tails. So they all have bottoming tails. Then you can cross verify it with the Euro USD, and as you can see here with the Euro USD, 1.0940 is resistance, which if you go to my website www.cfds.education, for those of you that already follow it, you already are aware, but those that don't, if you go to cfdstrader.education, you can observe it on there. Alternatively, you can observe it at cfdstrader.wordpress.com. Okay, so certainly observe my analysis there. That certainly is available for all to see. Okay, so that certainly is something for you to visit. Okay, now, and the analysis, like I said, will all be on there. Okay, so certainly visit that if you wish to obviously learn. Let's just have a look here. So yeah, cfdstrader.wordpress.com. Okay, and the other website as well, which is posted. You'll see on my Twitter account. The details are certainly there. Okay, now in terms of euro, it certainly is holding that resistance at 1.0940, obviously, which is helping the actual risk trade. Bring a chart of the bonds as well. This is going to be quite important. The bonds, obviously, as you can see, sold off with the euro obviously rallying to a large extent. Okay, so now, sorry, we pushed higher from this pivot low here. Now let's just go to the 60-minute chart, and you can see I mean, ideally, a sell-off in the actual bonds should technically cause for the euro to actually rally, but this certainly has broken down to a large extent. Let's just have a look here. Okay, so this is a slightly worrying sign. Okay, in terms of the QE, whether they want QE or they don't want QE, we'll certainly have to see. Now, generally the case is that if the bonds obviously move higher, the euro generally tends to move lower, and vice versa. And as you can see here, that the relationship has broken down to some extent. So I'm just going to ignore that for now, although this relationship certainly holds, and certainly sort of one to certainly take into consideration. Now, you are into that 200 MA, so we have had the bottoming tail. So certainly look for a move, potential thrust higher on the bonds now, and obviously that will send the euro potentially lower, and that should help equities in general. So bear that in mind as well. Okay, now. Again, that relationship certainly seems to be one that's broken down. Now, let's bring up the chart of the Aussie and the Kiwi as well. I think that will be quite important here. So let me see if I can bring the chart of the Aussie. The Aussie certainly is moving higher here at 1.6977, certainly thrusting higher. We have the chart of the Kiwi as well, certainly lagging. Well, obviously with regards to the Aussie, we had positive, or we had strong data out overnight on the Aussie, so that certainly needs to be taken into consideration. Okay, now the risk certainly seems to be being embraced here now, as you can see with the Aussie and the Kiwi, and that certainly needs to be taken into consideration going forward. Now, the daily chart of the German DAX, I mean, the Aussie and Kiwi, if you interpret that in terms of risk, folks, then obviously the Aussie and Kiwi going higher means that investors are embracing risk, and you can see that clearly on the Aussie JPY and Kiwi JPY chart for those that are wanting to follow. Okay, Aussie JPY, Kiwi JPY, and that will explain why market participants are embracing the risk. The daily chart of the German DAX, we closed or more or less approached that gap fill, and obviously we've put in a bottoming tail. So again, all bullish signs. 60-minute chart, we've certainly counteracted the previous support equals resistance, and that certainly does not hold to be true now. The 60-minute chart, we're consolidating here on the German DAX, and for a potential thrust higher. So a bullish engulfing candle has been registered. Okay, now observing the other indices now, the French CAC. Let's go to the daily chart first and foremost and see exactly where the market's trading now. Daily chart again, bottoming tail, so again looking for a potential bottom before we get this reversal, which is going to be key. Connecting the pivot lows together, and you'll see that you do have this downward sloping trend line. Okay, and again that's something that we're going to be observing. Okay, looking at the 60-minute chart of the French CAC, again bullish engulfing candle, taking out previous support equals resistance, looking for consolidation here before we start to thrust higher. So again, take that into consideration as well with regards to when you're trading. Okay, that certainly is something to take into account. Now the actual 10-minute chart of the French CAC, let's just bring that up for you again. The market has no longer has negated the concept of lower lows and lower highs, and is now putting in a potential inverted head and shoulders formation, and that's basically where we stand at this juncture. Okay, so we're consolidating before we attempt to thrust higher. So there's the left shoulder, there's your head, there's your right shoulder, and then obviously off we go to the races. You're looking at gap fill support at 4390. That's the zone that you'll be looking for. You do have previous support equals resistance in this zone here, so that's something that you'll watch out for on the upside at 4380. But again, it's subject to the inverted head and shoulders formation, and again, it will be that the bonds will be very important here. Now, the way in which the bonds are trading at the moment, and again, this is quite a concern. If I go to the Euro bond, given the fact that the daily chart certainly has put in a potential top on the bond, that generally means that the bond will start to move lower. When the bond starts to move lower, that generally means that the euro will obviously move higher. Okay, and that obviously is negative for the equity market. So again, some food for thought. Now, if the bond starts to break higher, given the fact that we talk of additional QE, etc., then you are going to see a breakout of this bond here. We'll test the 162 level, obviously more QE, etc., and that will send the euro lower. Okay, so bear that in mind. Okay, going back to the German DAX now, let's go to the German DAX, which I've explained to you. You have this key level, a bull flag formation. On the 10-minute chart, you have the inverted head and shoulders, very similar to the French CAC. and you have this unfilled gap that needs to be closed at 9960, so bear that in mind. Going over to the FTSE 100 now, let's see exactly where this is positioned. Okay, going to the daily chart first and foremost, you can see a potential bottoming tail that's been formed at this level at 5875, which obviously is bullish for the FTSE, and you can see that that base has been set in stone. Okay, so again, 60-minute chart, you have this bullish engulfing candle, which obviously did hold previous support equals resistance. You're looking at consolidation here before the market starts to move. So you can see here, and then off we go to the races. So consolidation before the next move higher, which is the seen at 6,000 to 6,020, and that will be based on the premise that obviously oil prices start to thrust higher as well. Okay, so certainly take that into consideration. And Mr. Bullard certainly has lit a fire. Not only has Mr. Bullard lit a fire, you have the BOE, you have the ECB. So these have all certainly helped to obviously cement the bias in the market, and that's exactly what we're expecting, a 6,000 level on the FTSE 100. Okay, so currently trading at the 5950 region as we speak. The FTSE is very, very impressive. Okay, now the summation here is that, or conclusion here is that the markets are certainly bullish. And as you can see here, the dollar certainly seems to have put in a potential double top on the 60-minute chart. Daily chart obviously is exhausted and certainly is calling for a potential rebound. Okay, right, I think that's a market wrap, folks. As you can see, bias remains bullish for now. Same with the Eursotoxx, DAX. They all are posting inverted head and shoulders formations. So be wary of the actual market in the next 24 to 48 hours. Certainly seems to be biased bullish. Okay, be sure to visit cfds.com for your trading needs. Goodbye now.